With the ongoing government shutdown impacting data collection and reporting, it's left investors looking for alternative sources of data. So in the employment market, a very common one is the ADP payroll report. It's reported each month. We actually saw that last week, and we saw a decline in that measure, which made us wonder, what is the relationship between that ADP report and our traditional non-farm payrolls report that we're used to seeing the first Friday of every month? So what you'll see on your screen in a little bit is what's called a scatter plot. If you're not familiar with that type of chart, it's really just used to combine two streams of data. So in this case, we're looking at the monthly change in payrolls as reported by ADP and relative to the monthly change in payrolls as reported by non-farm payrolls. So I'll describe the chart and the two features of it, I think in the context of the data, and hopefully that'll make it a little more real if you're less familiar with this type of chart. First thing you'll notice is a dotted line that goes from kind of the southwest quadrant up to the northeast quadrant. And that's the first indication of, is there a relationship between the two? And so that line would tell you, yes. So when one goes up, the other typically goes up as well. When one goes down, the other one typically goes down as well. So the beginning of a relationship here. The other feature are the dots you see, so the plot itself. And what you really notice is these dots are spread out kind of all over the place. There's not a discernible pattern. And in fact, we've even truncated this chart. There were dots well off the screen here that we kind of zoomed in on, if you will, to get to the data that you see. And you just notice there's not a huge pattern. So what that tells you is there is a relationship, but it isn't a very strong one. We can't draw too big of a conclusion from that change in ADP as to what we'll eventually see when we get the non-farm payrolls report. So if we were to see those blue dots really tight, almost looking like a blob, and typically around that line itself, that trend line, that would be an indication, hey, there's a really tight relationship here. When one moves this way, the other one's going to move in a similar magnitude within its data. We don't see that here. So the note for us is just be careful as we look at alternative sources of data. If we're really interested in that non-farm payrolls report, some of these may be indicators, but not real strong ones. And in no way are we trying to be critical of the ADP report. It's based on its own survey. So companies that use ADP for payroll processing, that's the universe, if you will. It's about 25 million workers, whereas the non-farm payrolls universe is a third of the American workforce. So much larger, many more companies, much more robust. So we would expect to see different things. So again, as we're looking for these alternative sources, just know what you're looking at, know how to use it. And then when we finally get back to our data, we'll have even more information to see in the future, what are the things that we can use to indicate what's going on in the economy. So with that, thanks for stopping by. Hope you have a great day.